It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to the Real Estate Breakfast, breaking down for you the Aussie property market after the long Easter weekend. Hope you had a good one. It went way too quickly, as it always does. Not all of us are back today, so if you're still sort of relaxing and enjoying the break, make the most of it, because who knows what is likely to happen in the next few months in this upside down world that we are living in. Literally anything could break. And if you're a new listener and you'd like to get in touch with us, you can do that with whatever is on your mind. You can use the voice recorder. It's always available. That is below in the show notes. Easy to use. Or you can email us to myrealestatepodcast@gmail.com. It is a Tuesday, yes, April the 7th. Now, the Aussie property market is still pushing into record territory, with prices up 9.4% over the past year, but the pace is clearly slowing. Gee, you've only got to have a look at the auctions, and we'll talk about that in just a moment. Recent rate hikes, they are starting to weigh on borrowing capacity and buyer confidence. While demand remains supported by tight supply and population growth, the market is shifting into this more moderate phase, with growth losing momentum. Let's take you to Sydney right now, where Veronica Morgan from Good Deeds is waiting for us. And a very good morning to you, Veronica. As I say, after the Easter break, how was your long holiday?
Well, good morning, Craig. It's lovely to have 4 days off in a row. So I have to say I enjoyed every minute of it.
Way to go. Yeah, as I say, plenty of people still making the most of it. Interest rate rises now, as I say, they're beginning to bite, particularly in more expensive markets like where you are in Sydney. The areas of Sydney and Melbourne, they're showing signs of this softening as borrowing power declines, reinforcing this clear divide between high-priced and more affordable markets. How are you finding that over the last month or so?
Yeah, we certainly saw in February, when the first rate rise came through, there was an immediate impact, and you could see it in clearance rates. So auction clearance rates in Sydney and in Melbourne, actually, for that matter, they're usually at their highest in February, because you got the perfect storm of a tail end of a Christmas summer holiday period where no new listings have come on the market for sort of 5 to 6 weeks, and a lot of fresh buyer interest as well as sort of residual interest from the year before. So you got lots of buyers, not that much in the way of property, and so often we would see very, very high clearance rates, often above 70%. That's not unusual for the entire month of February. So we got that. The last weekend of January was over 70%. The first weekend of February was over 70%. Then the rate rise, and then bang, it went under 70% into the sort of balanced territory. And we've just seen it declining all the way since then. And in fact, the weekend before Easter, we had it was nearly 1,900 properties listed for sale by auction in Sydney on that weekend. That I can't recall a weekend when it's been that high. 1,500 is normally seen as huge, right? And nearly 20% of those are withdrawn prior to the auction, and that's usually because the owners and the agent, one or the other or both, are not confident they're going to get the result that they want. That shows vendor confidence waning, as well as obviously clearance rate dipped to 55%, showing that that's well and truly a buyer's market.
Yeah, what about the vendors at the moment? Because, as you say, some of them were pulled out of the auction. There's still this headspace, isn't there, where people just seem to think that their properties are, you go back 12 months ago, they're in that range when they're clearly not. It's just a cycle, though. It takes time for them to catch up before they fully sort of grasp reality.
We find that whenever there is a major change, so an external shock, I guess, that impacts the property market, we find that any campaigns that are sort of caught out in the middle of that, that's a bit unfortunate, because those owners start off with one set of expectations, and then something shocks the market, which means that that set of expectations is not necessarily going to be delivered on. And so then they've got to decide, well, do I want to meet this new market or not? And so that's why you will see that level of, or that percentage of properties that are withdrawn from from market, you will see that spike under those circumstances because those people don't necessarily have to sell. And I think too, that's the thing about established markets. If you're looking at a market where there's a lot of, properties being bought off the plan, for example, they're only a few years old and people are hit hard times, you're going to see a lot of stock come on the market. It's all very similar, very homogenous and a similar price, and a lot of people in a very similar debt situation. Same with house and land packages. But when you're looking at those established markets of, inner and the middle rings of Sydney and Melbourne, for example, people don't have to sell necessarily. I guess those last in with high debt might feel extraordinary pressure, might have to, but that's not the majority of those markets.
Yeah, and with this particular shock, you're talking and interacting a lot with investors. What are the investors telling you in terms of buying stock at the moment? Are they saying, whoa, let's just sort of wait and see what's going to happen? This is very unstable. We only have to look at the petrol pump to see how all of that has risen over a very short period of time.
What I find typically is that investors might think they're being logical, but they're often not. In reality, buying in a falling market is a great idea. As long as the market's got fundamentals and you've got long-term objectives and you're able to buy a good asset, then you can ride out these bumps in the market over time, right? But most investors don't look at the property that way. They look at where can I get an immediate gain, and that's the reason you've seen a lot of investor activity actually in Melbourne. It's one of the reasons why, let's look at Melbourne for a minute. Melbourne's been in the doldrums, has been undervalued, if you want to call it that, for some time. A lot of investors from interstate, people that have got huge equity gains in the last, say, 5-year boom in Perth and Adelaide and Brisbane, for example, they're now turning their attention to buying interstate in Melbourne because they're thinking the same thing's got to happen in Melbourne. It doesn't necessarily follow, but that's the logic. And they're buying and they're competing in the same price bracket the first home buyers are competing in because they've all been recently incentivised by the federal government with this 5% deposit scheme. So you've got sort of a perfect storm where you've got first home buyers and investors all piling into one market. It's very buoyant in Melbourne, that lower quartile, whereas the top quartile has experienced price falls. So it's a tale of 8 cities, and within each city there's a tale of many, many different markets, and the behaviour of buyers and sellers will be dependent, I guess, on what's happening around them.
We are talking to Veronica Morgan from Good Deeds this morning. When we come back in just a moment, I'm going to ask Veronica, because I do feel for you first home buyers, as she mentioned, the investors are targeting Melbourne at the moment. How difficult is that for you as a first home buyer? What can you do? Let's ask Veronica the other side of this for some answers.
Listen to expert perspectives with exclusive real estate conversations and supercharge your knowledge base with us. We are more than just a real estate podcast. We cover a multitude of subjects, including property data, current buyer-seller sentiment, and the mood of the market. Follow each week all of the main talking points and know your property.
It is a Real Estate Tuesday, back after Easter. Veronica is with me talking all things Aussie real estate around the country, including the big geopolitical shock that is with us. Boy, how many times do you look at that petrol price at the moment as you're driving past? I think we're all doing that, aren't we? Just watching it go up and up and up, and it's expected that is going to be long-term pain. Talking of pain, we want to sort of focus on first home buyers in the Melbourne market. Since Veronica is with us, what would you suggest, Veronica? Because people listening, first home buyers, they're pulling their hair out at the moment because of these investors, interstate investors. They're zooming into Melbourne, they're buying product left and right, and they are cancelling out a lot of these first home buyers trying to get into the market there.
It is making it really difficult for first home buyers. There's no doubt about that. One of my other businesses is Home Buyer Academy, and we have a course, an online course and mentoring program for first home buyers. And we're talking to people in the trenches, and we have quite a few people buying in Melbourne who are, telling us their stories of how they're watching prices move in front of their eyes. So again, the headlines might be saying prices are falling, but that's not their experience on the grounds. But what we're teaching first first home buyers is that there is a process that they need to learn and to go through. And we're coaching them on a weekly basis about what to do when they're priced out of a market, how to recognize that they're priced out, how to not let that overcome them, how to pivot, how to make sure that they don't sort of knee-jerk and make silly decisions. So a lot of clarity is required, persistence, don't give up, but also recognizing what's going on around you, measuring that and tracking that and responding accordingly and pivoting when necessary.
Yeah, the other thing too is first home buyers, because of the softening market, they might be saying, well, this is great because we can get some better terms in the contract. If not for the investors, yes, that might actually work, but best terms, the investors are going to have the better terms than a first home buyer. So that once again is cancelling out that expectation of, gee, this is great, things are starting to change for us.
Well, that's it, because one of the challenges a first home buyer has, particularly if they're relying on the 5% deposit scheme, is that, they're very tight in terms of the property valuation. So the bank won't value a property until after you've actually committed to it. Now, you're not going to get a subject to finance clause agreed to by a vendor or by an agent if they've got a lot of buyers interested in that property. Why would they risk, selling to somebody that's subject to finance? And if it's going to auction also, you're not going to get a subject to finance clause. So therefore, that makes it really difficult for first home buyers. They need to then be very, very confident at the price they're paying. And one of the things that we teach as well is how to price a property like a professional. That is a really important skill set, and it's very important that they learn that so that they can have confidence, because they are taking that risk and the bank is not sharing that risk with them.
Yeah, so good luck if you're a first home buyer, I guess, off the back of that. It is not easy, even in a changing market. Australia's building approvals, they have surged past 19,000 in February. That is the strongest result since 2021, but we're still well short of what is needed to meet housing targets, and that gap, unfortunately, is becoming larger. Even with momentum returning, supply is lagging demand, which means ongoing pressure on prices and affordability across the market. At some stage, they're going to have to revise these targets, aren't they? Because they're just not going to meet them.
It does make me laugh that they still persist with, saying that this is a target. But, you've seen, particularly in Sydney and Melbourne as well, you've seen a lot of quite aggressive rezoning by state governments, overriding councils, local councils, and putting very aggressive targets on those councils. And there's been a lot of controversy about this, but it certainly seems to be feeding through in terms of those approvals. And I'm not necessarily sure that the housing is being created in the areas where it's most at need, but it will be created where it's most profitable for developers, because at the end of the day, they've got to make a buck, right? Otherwise, why would you go into that endeavour? It is interesting to see that that's starting to, I guess, that aggressive rezoning is starting to show up in the figures, because a lot of that are apartments that have been apartment approvals as opposed to houses. There's just so many factors here that contribute to whether or not any target is going to be made. And, one of those building costs, availability of trades, there's a whole bunch of reasons why the federal government has failed to meet those targets that they set.
A lot of people are just hanging out for November 2026 because of the global shock and that name Trump. After the midterms, they're saying that they'll probably get annihilated and he's going to lose control of the House and be somewhat of a lame duck president. Boy, we will wait and see what happens. There is always something to talk about. We'll leave it there. Veronica, enjoy your Tuesday. Enjoy all of that coaching that you're doing with those first-time home buyers. And thanks for coming on to the Real Estate Breakfast this morning.
Always love it to chat. Thank you.
Unlock the secrets of real estate and stay informed about the latest real estate buzz with hot market trends, emerging suburbs, and hidden gems. We connect you to the best real estate information across Australia. The Real Estate Podcast.